Good morning, everyone. This is the weekend update for Saturday, February 7th. It's going to be a short video today because we don't have a whole lot to talk about. It continues to be a very frustrating, one-sided kind of market. We had a big rally last week when it looked like we were going to implode, and, looking at the daily chart here, you'll notice that when we go up, it's on lower volume. When we go down, it is on heavy volume. And that's not really a good sign. But as you can see, we continue to get stuck, or are continue to be stuck in this trading range on the Dow. Essentially 17K, 18K. We topped out. It appears to be we topped out on Friday. But right now, we just have this nonsense with Greece. Greece is okay, Greece is bad, Greece is okay, Greece is bad, and it kind of whipsaws the market back and forth. And on Friday, we had a debt downgrade of Greece. Come Monday, we could have a deal with Greece and rocket higher. And in this kind of environment, it's really tough to be on either side. Cash is really the safest thing. The shorts over the last 3 or 4 days have gotten bent over a barrel. But if you go long, the way these intraday moves are, the market could be up 60, 75 points. You go grab a cup of tea, you come back, and the market's down 50 points because some unnamed official in Europe said something. And, we just continue to be stuck in this annoying market. Where do we go next week? Dow Transports, even though we had a okay pop over the last 3 days, it's not leading the market right now. And throughout the course of this bull market, the Dow Transports have been the strength. And we have, as you can see, a solid triple bottom support level in. For all intents and purposes, it's the 200-day moving average. This level breaks, down we go. Looking at the daily chart on the Dow, same thing. 200-day moving average breaks, down we go. And that is the big risk in this market right now. Russell, even though small cap stocks should be doing well, they are not. The only real small cap action we are seeing now is on an intraday basis, and you got to be quick, you got to be nimble, and you cannot be greedy. And you got to be okay that if the 1 out of 10 stocks you jump into continues to rally, you got to be okay with that, because for every one of those, there's 9 others that don't, and it's just flip mode right now. No one wants to be brave and be the first one into a stock. They want to chase a stock that's up big, has news and big volume, and hope to get a few cents on the middle of the move. And that's just not a market conducive to a lot of risk, as we've seen over the last few days. Now, where the action has been, and we've done very, very well, are in option plays in the large cap earnings stocks. Twitter, absolute monster for us. We are now sitting on a close to 800% gain now on these call options. We booked half ahead of earnings, making it a free play. Booked some more on Friday on the romp, and now it's just sit back and see what happens, because we have monthly calls on these. Could see a continuation move to 50 next week. As I mentioned, we've pulled off a lot of gains on these calls, so we can essentially ride these with, $1.50, $2 stops. Gives us a 300-400% gain locked in on the stop, and see where they go from here. But very nice move on Twitter for us. Now, opposite of that was GoPro. Now, GoPro, absolute monster earnings report on Thursday. The stock got halted. They opened it at 62, and then the shorts hammered the crap out of this stock. And, I've seen a lot of things over the years. This kind of action, I don't know what to say. I mean, these guys made 600 plus. They made almost as much revenue as LinkedIn. LinkedIn only made $3 million in net profit. GoPro made 122. GoPro, market cap, a quarter of the other one. We can go into different sectors and whatnot, but it's just a tale of how this market is. I love the dot-com days for one reason. Companies didn't give guidance. It was fantastic. The moves you used to see on earnings reports without guidance was awesome. But, this stock, the shorts control this stock. The action it had here, I doubt I will play this one ever again. But, things may change, but disappointing action for sure on this one. Now, With that in mind, we do have a very nice options play going into this week. Zynga. Zynga got a very nice downtrend break on Friday, which has been really the key ingredient for our big option win plays. Netflix had a downtrend break into its earnings report and zoomed. Twitter had a downtrend break into its earnings report and zoomed. GoPro did not have that downtrend break into earnings, and it faltered. So at least we've seen what the pattern is. Zynga, I think they're going to beat nicely. And if we get a nice earnings report from these guys next week, we could see some serious upside. Earnings report is on Thursday. Last year, for its earnings report, it ended up going up $1 plus on the report. So we've got some nice upside potential in this one. We picked up Zynga $3 call options, February 20 monthly call options. It's 8 cents. I believe they hit 11 cents on Friday. Could get anywhere from 25 to 50 cents or more on these puppies going into that earnings report. The big break is going to be that 200-day moving average. Hopefully, we're going to continue to see this one slowly push higher into the earnings report. And actually, if I tighten up the chart here a little bit and move off this 1 year time frame, positive MACD cross on Zynga on Friday. The last couple of positive MACD crosses have resulted in very big upside moves on this stock, as you can see here. Usually we're looking at anywhere from 30 to 50% upside moves when it breaks and gets a positive MACD cross. So that looks great for us going into this week. The only other stock we really had this week, which is a huge disappointment, was GCVRZ. I actually thought the report was good. They did $2 million in sales just in 3 weeks in December in the U.S. Like it. Someone didn't like it, and they beat the shit out of this stock down through stops and just imploded. I still believe the chances for this company or this CVR paying out are very high, but the market doesn't think so. We got to sit and see what happens right now. You know, it's a really frustrating market at this moment. You could look at 3 stocks doing the exact same thing, and 1 out of the 3 will zoom, and the quality of the other ones won't. Case in point, BPZ, debt-ridden oil stock that we jumped into because it sucks. Its fundamentals are awful, and the stock is up almost 50% this week for us. Then we have a stock like MPET, loaded with cash, fantastic chart, and it can't get out of its own way. Looked great into Friday on the oil move, got beat up. Still one that they're going to chase this puppy on a break through the 50-day at 90 cents. So definitely keep an eye on this one next week if oil is able to continue its move. But it's just a tale of 2 markets right now. Flip a coin, which one's going to go? Not an environment where you want to be pressing your bets big. This is a keep it small, be nimble kind of market. Doesn't tend to last a long time, although this has been going on now for a couple of months, really, with some brief periods of funness. Hopefully, we'll see a more active week this week, but essentially, it's going to be all intraday moves, I think, unless something really compelling hops out. Have an awesome weekend, guys. See you all in the chat tomorrow. Monday. Bye.